Hello and welcome to this Friday's morning market briefing. We've got lots to talk about, but firstly, the Bank of England lowers rates to 5% in first rate cut since 2020. As well as that, Hezbollah chief says Beirut killing takes battle with Israel to new phase. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around as soon as you see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is obviously to do with the Bank of England and them cutting interest rates. Now, the Bank of England has now made its first cut to interest rates in what is more than 4 years. This comes following a 5-4 vote, which provides the UK with new economic goals that are other than bringing down inflation. Now, of course, when we started off the week talking about what data is going to come out this week and what key economic news is going to come out as well. The kind of key thing that I noted was, of course, the Bank of England's interest rate decision. Now, obviously, the Bank of England's not the only central bank which had an interest rate decision this week. Obviously, the Fed also had one, and we covered that not only in yesterday's morning market briefing, but we also kind of looked ahead and started to kind of, predict or kind of understand what might happen, and we've been doing that throughout the week thus far, but ultimately the Bank of England's interest rate decision was a very important one that we'd been kind of waiting for, as I said, and ultimately, whilst we are receiving the NFP figure ending off this week, this figure, or at least this economic news point, was very, very important to us, since as you all know on this channel, if you've watched these videos for quite some time now, is we focus on things like the pound and other British related assets, and even delve into British politics to better understand how that might affect the pound and other UK related assets. So obviously this was a very big decision, as I've kind of emphasized there, and ultimately the question really was hanging over most people. The question that was really hanging over most people was, of course, whether an interest rate cut would be made. Now, if we think back to around 2 months ago, maybe 3 months ago, really the Bank of England was shaping up to be the more dovish central bank, really, out of the kind of three of those key central banks that we always cover, those being the ECB, the Fed and the Bank of England. Now, whilst the ECB seemed the most likely to cut rates earliest, at the same time the Bank of England was even predicted to kind of possibly cut interest rates at the same time as the ECB, which was far earlier than the Fed, who are expected to cut rates earliest in September, but even possibly later than that, with some even speculating no interest rate cuts this year. So obviously, every kind of central bank had a very different monetary policy position at that time. But as we spoke about in yesterday's morning market briefing, the situation has very much now changed for the Fed once again, and it seems like they're now posturing once again towards a more dovish position, with them being very likely now to cut interest rates in their next meeting in September. But the Bank of England has beaten them to it and cut interest rates by that 0.25 percentage point rate, which of course, all central banks, or at least all of these kind of key central banks that we talk about, are looking at cutting interest rates by, at least to start off. They're not looking at making these massive cuts, which are more hard to kind of reverse and manage. Because of course, the kind of key issue that's faced central banks regarding this inflation topic, not only is the nominal inflation figure, but obviously the services inflation figure, and why the services inflation figure has actually become of greater importance recently is ultimately because whilst we've seen inflation drop in both the Eurozone, in Britain, and somewhat in the US, at the same time service inflation in all of those kind of economic areas has remained high, has remained stubborn, and this is a kind of key indicator of where inflation may stay at, or where inflation may go. And ultimately, if interest rates are only affecting one part of the market, or one part of the economy, and bringing down inflation in one part of the economy, especially on the consumer side, ultimately, what does it say about the interest rate position if things like services inflation, or the kind of more business side of an economy is still struggling with the topic of inflation, and whether that then means that you can't cut interest rates despite the the nominal inflation figure that everyone somewhat experiences more easily is not coming, or has come down, and so that's the kind of key question. That's what we'll kind of reflect on as we go through this article, as it is something that does come up, and does bring into question whether any rate cuts will really be able to be made after this interest rate cut, as whilst the way we kind of experienced those interest rate hikes throughout the period of 2022 and then 2023 was one in which we kind of just saw interest rate bump after interest rate bump after interest rate bump. It's very unlikely that we see the kind of inverse of that now as we start to cut interest rates. And in fact, we're more likely, the way key central bank officials are talking about things, it seems more likely that we're actually going to see kind of interest rate cut, wait for a few months, then maybe cut interest rates, but maybe other central banks will then wait another 3 months, because it's all about collecting that data, which of course Jerome Powell's been very key on, but as well, Governor Andrew Bailey, which of course is associated with the Bank of England. So this is a very important topic once again, with the MPC voting 5 against 4 to cut the benchmark interest rate by 0.25 percentage points. So obviously this was a very close decision, not one which represents an overwhelmingly kind of dovish position from the Bank of England. Now that said, many are still worried about the continued persistent inflationary pressure within the services sector, which hasn't begun to decline in the same way. The Bank of England Governor Andrew Bailey reflected this caution and assured press that this interest rate cut would certainly not mean a wave of further cuts were to follow. He made it clear that the Bank of England would now have to be very careful to not cut interest rates too quickly and by too much. Despite those cautions, investors are now expecting the Bank of England to make 1 or 2 further rate cuts by the end of 2024. Financial markets did respond to the news, with the 2-year yields falling 0.12% and the pound also dropped a further 0.6% against the dollar on the day. This interest rate cut is great news for the new Chancellor of the Exchequer, Rachel Reeves, as she attempts to push Britain into a period of economic growth. Economists, however, have said that the decision was more of a hawkish cut, so that once again brings into the question of whether we'll actually see interest rate cuts follow this interest rate cut, or in fact we're now looking at a period maybe where interest rates stay at that 5% level for the Bank of England. So we'll have to wait and see, obviously, but we'll keep you updated on any pound news or UK data or anything like that will affect the pound as well, and affect maybe the way the Bank of England will look at their monetary policy position. That's all to talk about in this article, though. Next article to talk about is to do with Hezbollah and the kind of topic of the Middle East, where of course we know there is rising tensions that we've been covering actually for quite some time now. Now Hezbollah's leader has now said that the battle between his militia group and Israel has now entered a new phase following Israel's latest assassination of a senior commander. This statement came as he spoke through a video link just before the funeral for the commander on Thursday. Now, of course, we've covered this as things have unfolded, as over the past week, Israel has now seemingly taken out two very, or at least more than that really, but two very senior figures in the kind of axis of resistance which oppose Israel and have been fighting Israel since the October the 7th attack and massacre. Those groups and their leaders obviously being with Hamas, and their political leader being killed in Tehran just the other day, and also in Beirut, Lebanon, which this article is more concerned with this kind of senior Hezbollah commander, so not the leader of Hezbollah but a senior commander for Hezbollah, has also been killed. And of course, this is just kind of continuing what we've actually seen for the past few months now, but really this ramps things up in its kind of significance, obviously, just simply because whilst over the past few months we have seen the IDF use its aerial assets to strike certain Hezbollah targets, especially just military figures and that kind of thing, and military installations. Ultimately, we haven't yet seen this kind of intensity of attacking and taking out key senior commanders, as obviously it's a very hard thing to do with you need the intelligence assets out there in the field to actually gather enough data and create proper plans to take out these figures without causing a massive blowback on yourselves. And really the IDF and their intelligence agencies have really proved themselves to be a really efficient fighting force and efficient espionage force as well, through their recent killings. But obviously at the same time, this brings new questions to the matter. Those being, of course, whether now a massive kind of regional war will open up, which has been something that we've kind of been warning of for quite some time, if you've been following this channel, of course, or even if you've just been following this yourself. Since October the 7th attack, we've seen skirmishes on the Israeli-Lebanon border between Hezbollah and the IDF. And at the same time, of course, the IDF has pursued a kind of aggressive posture into Gaza with their kind of invasion into the Gaza Strip. And obviously we know now that Israel has pulled most of its military assets out of Gaza, as somewhat, their kind of military objectives have somewhat been fulfilled, really. And ultimately, now the eyes are on Lebanon. But what this kind of killing now brings into question is whether other powers will now also step in, other than maybe Hezbollah. So we were expecting, an Israeli intervention into southern Lebanon, somewhat of a kind of special military operation, some would call it, where there is an invasion to kind of take out a certain group within a certain area and then move back out. That's something that we've kind of been hinting to, or been something that Israel's kind of hinted towards actually for quite some time now. We haven't seen that yet unfold, but ultimately these two latest killings now bring into question whether we're going to see a massive response from Iran, a massive response from Hezbollah in Lebanon, a massive response from Bashar al-Assad in Syria, where we know targets have also been, where we know that military assets have also been targeted, and even from Iraq as well with the PMF, which are well supported by Iran and have also vowed in their support with the kind of other Shia groups in the area, and of course the Houthis, which have been firing missiles and drones at merchant vessels but also at Israel for the past few months now. And should all those powers come together in this kind of military operation, or kind of defensive operation, or aggressive operation, whatever ends up coming of this situation, ultimately the question is, how will the West respond, how will markets respond, and how will Israel itself respond? So this is a very important situation to kind of keep your eyes on, as it's going to affect markets massively, especially key markets like oil and gold. And obviously, I always kind of reference that, but it's really something you have to hit home, because should this region fall into war, ultimately oil supply is going to massively be restricted, it seems like, especially as what we've already seen in the Gulf of Aden and in the Red Sea, the Gulf of Aden and the Red Sea. So ultimately, definitely keep your eyes on this topic. We'll keep you updated as well, with the Hezbollah commander having been killed in an airstrike this week in southern in a southern suburb of Beirut, which is widely considered to be a Hezbollah stronghold. He stated that Israel had breached its limits and now should expect a certain response, with the leader going on to once again repeat that the only way conflict would stop occurring between his group and Israel is if a ceasefire in Gaza was achieved. Hezbollah's greatest supporter and arguably leader, Iran, has blamed Israel for the recent assassination, despite Israel neither confirming or denying whether they carried out the attack. Netanyahu only on Wednesday said Israel is at high alert and ready for anything. So obviously, as I said, we'll keep you updated on this topic, but you're going to have to keep updated yourselves, just because new news is coming out every minute. And as soon as something kind of occurs and something breaks out, the market's going to be affected. So keep your eyes on this topic always. That's all to talk about in the articles, though. Next to talk about is the charts, which we're actually going to have to spend less time on because we've spent so much time on the articles. But like always, of course, we're starting on the US 30. We're talking about the Dow Jones, where some very interesting things are playing out, with price retracing to the downside yesterday with this significant sell-off, really, with price, once again moving to the downside during the kind of intraday hours. So, over the course of this week, we've really seen price kind of move slowly to the upside, somewhat kind of chop its way to the upside, so not making any kind of massive moves either to the up or downside, but really just this slow movement. And then what we've seen play out yesterday is a sell-off, a retracement from those levels that price was kind of consolidating at. Now, if I kind of delete this Fibonacci retracement tool that we had out for quite some time now, just to kind of understand the macroeconomic perspective, we draw out a shorter term kind of Fibonacci retracement tool, and we kind of stick on those key levels. We can see that price has now just reacted or bounced off that 78.60 Fibonacci retracement level. So the question now is, of course, whether price will swing from this level to the upside and continue these moves that we've been seeing to the upside for the Dow Jones for quite some time now. At the same time, though, one has to question the fact that, are we now in a reversal period, since the this recent high, the top of this Fibonacci retracement, where we've kind of extended the Fibonacci retracement to, is ultimately lower than the regional high, the all-time high levels, which price wasn't able to breach. So possibly we're kind of creating a new situation for price to move to the downside. So definitely keep your eyes on the US 30. Interesting price action. Next to talk about is the dollar, which has now returned to this range. So in yesterday's morning market briefing, I spoke about how we were speculating whether this false breakout would lead to price returning back within this range. But that said, in yesterday's morning market briefing, we were obviously watching the dollar start to push further and further to the downside and start to break to the downside. Ultimately, though, price has now returned back into that range after some bullish momentum has entered the market over the course of yesterday. Why that might be, there's numerous reasons, but one of them could, of course, be the pound weakening after the Bank of England cut interest rates for the first time in 4 years, and then obviously also the kind of increasing world tensions within the Middle East causes investors to move into the dollar, move cash into the dollar, because it is a safe haven asset. So those are the reasons that the dollar could be moving to the upside today, and those are the key things also to keep in your mind today when we are receiving the NFP figure from the US, and also we're going to be hearing lots about what's going on in the Middle East as well. So lots to think about there. Next to talk about, though, is Euro USD, which there's not really much to say, so we'll kind of not talk about it for too long. But ultimately, price has broken to the downside, broken below this liquidity zone that had formed as an area of support, and an area of support and liquidity. So price is now broken below that level, but is ultimately kind of actually staying within it at the same time, kind of hovering around it, but not utilizing it in any key ways. So we'll skip on from that, but definitely keep your eyes on Euro USD nonetheless, because as I said, we are receiving that US NFP figure today. Next to talk about is pound yen, which is of course very relevant to cover considering the Bank of England news that we've received today. So price has sold off massively, and it's just continuing this knife drop that seemingly played out ever since the 11th of July, where price just sold off massively from that 208 level, and now we're down and around the 189 level. So that's how far price has fallen, and it doesn't seem like price is stopping anytime soon, with price now just breaching the very key liquidity zone around that the 190 level, which price had previously utilized as a key area of support. And if you just compare the price action to what we've seen over the past year or so, or even 2 years, you can see how what we're seeing right now is just of unparalleled volatility. And the question will be where price stops to kind of even retrace or just range for a bit, because at the moment it just seems like price is not stopping this fall to the downside. Next to talk about, though, is Bitcoin, which ultimately has now just returned above this trend line, which price broke below over the course of yesterday. So we had some very interesting price action for Bitcoin yesterday, as price broke below this trend line that we marked as the bottom for price, and has now returned back above it. So possibly this was a false breakout, and now we're ready for that swing to the upside to reach those kind of Fibonacci extension levels around the 21,000 level, or 71,000 level, or $72,000 a Bitcoin level. So definitely keep your eyes on Bitcoin. Next to talk about, though, is gold, which is kind of stagnating around those higher levels that we were talking about yesterday, but ultimately price is still at that very key psychological level of 2,450. So definitely keep your eyes on gold. Lastly to talk about though is oil, which is retraced now to the downside after price kind of bounced off this key resistance level around the 38.20 Fibonacci retracement level and zone. So if we draw out that liquidity zone, it's very clear to see how prices reacted from an area of previous resistance, and now price is sitting on what is a 61.80 Fibonacci retracement level. So possibly we're now ready to continue that swing to the upside, should of course the fundamental news back that up. And of course the key thing to be looking at to understand what could be affecting oil is of course what's happening in the Middle East, and should tensions rise further, we could definitely see some of those moves that we were suspecting there for oil. That's all to talk about on the charts though. Lastly to talk about is the economic calendar. We're receiving some very important economic data today. Now firstly, we are receiving the Swiss inflation rate figure as well as the French inflation rate figure, followed by that receiving the Spanish unemployment rate figure as well as the Swiss manufacturing figure, and then following that we're receiving the Italian industrial production figure and then the Italian retail sales figure. But ultimately, to end off the day and most importantly, we are receiving the US NFP figure, so definitely keep your eyes on that, as that's the kind of key thing to note to end off the week. And we are forecasting 175 jobs added to payroll. That's all to talk about on the economic calendar though. We've got lots in the articles, lots in the charts, and lots in the economic calendar. Here we are, a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.